Hi, Emma Davidson here from the Global Value Fund. GVF has just released its full year accounts, and this is my 5-minute synopsis of what went down. As a starting point, I thought I might hold up FY 2022 alongside FY 2023 as a comparison. Now, you might remember that 2022 saw pretty much everything from an investment point of view fall out of bed. 2023 has then largely seen a recovery in markets. When markets went down last year, the GVF portfolio delivered positive NTA returns of 2.8%. GVF shareholder total returns for FY 2022 were also up at 5.2%. For 2023, GVF, as usual, ran with a much lower risk profile, about a 30% average exposure to global equities in the year. And despite this, total portfolio returns were up 15.5%. As a comparison, international equities in Australian dollars were down 8.5% in 22, up 20.7% in 23. Global debt was down 9.5% in 2022 and up just 5.4% in 2023. The majority of GVF's returns once again came from the discount capture element of the strategy, which generated gross returns of 8.6%. These great portfolio returns means that the steady Eddie that is GVF has maintained the final dividend of 3.3 cents per share, fully franked for the half. And the board has guided that it expects to maintain this level of dividend, so 6.6 cents for the year, which grosses up to 9.4 cents per annum. 9.4 cents per annum in turn turns into an 8% yield on the current share price. And that's 8% on that lower risk profile that GVF runs with. Another comment I'd make is around the sustainability of the company's dividend as we head into the future. On page 17 of the annual report, the profit reserve now sits at more than $48 million. This means that even if the company made no profits from here on in, it would still be able to pay the 6.6 cents well into 2027. Another highlight for me in the annual report is Miles's letter to investors. His ability to write in an informative and enlightening way that clarifies rather than drowns the reader in jargon never ceases to impress me. In the letter, Miles and the team also look ahead in the Outlook section and provide us with a great analogy of how Miles, Mark, James, and Marius are steering the ship as we head into 2024. When compiling the financials this year and working through the annual report, what was highlighted to me was the fact that the last 2 years really represent the best of what we hope the GVF proposition can achieve for our investors. Positive absolute returns in difficult markets like those in 2022, with still significant upside participation in more buoyant markets like those conditions in FY 2023. As a reminder to all shareholders, all of GVF's NTA returns are publicly available on the company's website at www.globalvaluefund.com.au. When you do get to the homepage, if you click on this tab that says Company Summary here highlighted, you'll get a little drop down called NTA Returns. If you click on NTA Returns, you'll be taken to the returns page. The first part of the page is an explanation of how we've worked out all of the returns, and then there's a table below that shows you all of the numbers that GVF has achieved since IPO. On this part of the website, you might notice that GVF, touch wood, Miles, I promised Miles I would say touch wood, GVF has not had a single down year in 9 financial years. That's not to say that we won't have down years in the future. I cannot, of course, guarantee that. But what it does highlight for me, and what I'm really, really proud of the team on, is that ability to protect capital. Yes, some years have been leaner than others. For example, FY 2020 saw us up just 0.2%. But the key is that the fund has not lost investors' money, and that's something I'm proud of. GVF continues to annualize at more than 10% per annum after all fees and expenses, but one of the most important guiding principles for Miles, myself, and the team, and something I hope is really visible from these final results, is that we remain acutely aware of the fact that the capital we invest is representing your savings. To the extent we can, our process will always seek to mitigate the risk of capital losses through diversification and thoughtful risk management, a discipline we'll always adhere to. Lastly, and not least, thank you to all of our shareholders in GVF. We simply wouldn't be here if it wasn't for you. Thank you.